Traders at UBA say investors are tactically increasing exposure ahead of Monday's primary market auction. Chuka Nwachukwu, head of Asset and Liability Management and Balance Sheet Management at UBA, joins me now to discuss the market's performance. Chuka, it's a pleasure to have you on the program. Let's just run through this week and the key takeaways in terms of the dynamics, in terms of liquidity and rates. What for you are the big trends that we should be watching now?
Thank you, Wale. The big take is on liquidity. I mean, for the throughout this year, liquidity has actually, drive the market. Last week we saw a lot of outflows, starting from the RDAS and as well as the NTB auction. So that kind of like, took out a whole lot from the market. This Monday, I mean, we opened the market about over 500 billion, and that deficit is still in the market and is actually affecting trading on the fixed income side.
An interesting point. But you mentioned the RDAS, and maybe you can just take a moment to reflect on how that is working out, because this is more or less a return to the approach that we saw under the former leadership of the central bank. Bringing that back suggests that there is some sense to how that can help to stabilize the market. What do you make of how it has worked out so far?
I think it's basically helped to keep the system liquid, and that also helped to to checkmate speculative demand. And so one key takeaway from me is the fact that CBN is saying, look, we have excess liquidity, or we have liquidity, we have a dollar to be able to meet the demand, and so people shouldn't speculate, people shouldn't hoard dollars. I think that, for me, is significant, and also indicates that interest to the fact that they are willing to meet obligations as regard the FPIs who come in and then they may want to go out. Just to allay the fear that, look, the system is liquid. CBN will continue to defend the Naira, and as well as ensure that supply is made available.
Can you preview for us the bond auction on Monday? What are you expecting?
So if you watch what is going on the bond space, despite the fact that the system is tight, we saw bullish sentiment, especially on the 2033. Recall that CBN, DMO released the calendar, and then volume was dropped from 300 billion to 190 billion. And that obviously has affected some of the calculations from traders. Those who had gone short, haven't seen the drop, the reduction in volume. We are trying to cover up, this short position from the interbank market, and that has actually driven down the yield. So going into auction on Monday, I see oversubscription, especially on the 2033. Not minding the fact that DMO dropped the volume, but I see oversubscription. Also, I did not see the rate move significantly from the last auction rate, and so by and large, I think that the auction would be a success. However, some people might still have their hand burnt, because if you are not able to cover at the auction, it means that you'll be desperate to cover in the interbank market, which for me is not favorable in terms of rate.
But where can we expect liquidity to come from to stabilize the interbank market in the short term?
So the only foresee liquidity coming to the market is the FAC, which is obviously going to be sometime next week. Except miracle happens, I don't foresee any liquidity coming to the market. Yesterday there were some payments that was made, remitter payment, which is not really enough to cushion the effect of the short position in the market. So except something happened, the system will continue to be tight, pending when the FAC is out.
Thank you so much, Chuka, for your perspective. Chuka Nwachukwu is head of ALM and Balance Sheet Management at UBA.